Okay, so if you just pull up the chart for Figma, that's ticker FIG,
Oh, wow.
the stock is down, something like 83% from its highs? I mean,
Mhm.
it is a total bloodbath.
It's ugly. And the whole narrative, the story driving it is just pure fear.
Hmm.
The market seems convinced that these text-to-app AI tools, like Replit or Lovable,
Right.
they're just going to make UI design obsolete, a commodity. So the thinking is Figma is basically Walking Dead.
That's the narrative.
Yeah.
But then you look at the Q4 2025 earnings report, which
Yeah.
just dropped today, February 18th. And, I mean, these numbers don't look like a company that's dying. Not at
Well,
all.
not even close. If Figma were dying, revenue would be shrinking, right?
That's why.
Instead, they just posted $303.8 million for the quarter.
And that's 40% year-over-year growth.
Exactly, 40%.
Wait, 40%. In this macro environment,
Yeah.
with everyone screaming about AI eating their lunch, that just flies in the face of every bear case I've read this week.
Yeah.
How are they even pulling that off?
You have to look a little deeper. The key is in the net dollar retention.
Yeah.
It hit 136%, and that's up 500 basis points.
Wow. So 136%. That's not just people sticking around.
Yeah.
That is aggressive upselling. They must be pushing seats way beyond just the design teams.
Exactly. That's the dev mode strategy paying off right there. They're not just a tool for designers anymore. They are embedding themselves in the engineering teams.
Where the headcount is, what, 10 times bigger?
At least. So customers aren't bailing to use AI. It's the opposite. They're consolidating their entire product stack onto Figma to manage the new AI workflows.
Huh. This sounds an awful lot like the Jevons paradox.
It is classic Jevons. I mean, AI makes code really cheap to produce, so we just get more code, a flood of it.
Right, but code without design is chaos.
It's just functionality without form. So as the volume of software explodes, you need a governance layer to manage all that chaos. Figma is trying to stop being a drafting table and become air traffic control for 1 million AI-generated apps.
So AI creates the flood, and Figma sells the dam. That must be where this new AI credit model comes in, the one launching in March.
Right, usage-based pricing on top of the subscriptions. They monetize the chaos.
Okay, so let's talk valuation for a second, because this is where it gets kind of wild. Figma's trading at, what, around 8.1 times forward revenue?
Yeah, about that. And then you look at a private competitor like Canva.
And they're at, what, like 12.7 times?
Yes. It's a massive disconnect. The public market is basically pricing Figma for obsolescence, for death.
But the private investors see the platform play.
It's a total arbitrage opportunity.
And the smart money seems to agree. We're seeing Viking Global just bought 5.75 million shares.
A huge new position, and Bailey Gifford nearly doubled their stake.
These aren't day traders. I mean, these are institutions betting that the public market has this completely fundamentally wrong.
They do. They're looking at the fundamentals, not the sentiment.
But you have to admit the optics on the insider selling look terrible. I mean, CEO Dylan Field is selling millions in stock while the share price is in the gutter.
It's definitely bad optics, no question. It rattles confidence. But institutions like Viking, they're not looking at the founder's tax bill. They see the business accelerating.
So if Figma is really positioning itself as this system of record for all software design, that means they're sitting on a mountain of proprietary data, a gold mine.
Which is exactly why they're getting sued.
Right, the class action lawsuit.
Yep. And there's a critical hearing in just 2 days on February 20th. The whole thing is about them allegedly using customer data to train their AI models without permission.
That's a huge risk.
It's the central risk. They need the data to be the AI middleware, but using it could get them into a world of legal trouble.
And what about the long-term existential risk, the one the bears are betting on?
Well, that's if AI gets so good that text-to-app is perfect, no visual interface needed at all,
Right.
Then even air traffic control becomes obsolete. That's the end game.
So the takeaway here really seems to be that Figma isn't fighting AI. They're trying to orchestrate it.
That's the bet. They're betting that humans, still need to see and manage and approve what the AI is building. They're the interface between human intent and machine code.
Exactly. So here's the thought I want to leave you with. If we're really heading into a world where AI can just generate infinite amounts of software, almost instantly, doesn't that mean we need an even stronger system of record just to keep track of it all? Is it possible the market is just making a huge category error here? By still treating Figma like it's just a drawing tool? Something for you to think about.